What is up, guys? Welcome back to the show, Bitcoin and Markets. Ansel Lindner here. Today is Monday. Happy Monday. Monday after the halving. Every Monday, I write the Bitcoin fundamentals report over on bitcoinandmarkets.com, and then we can go through it here on the live stream. So let me just pull that right up and get started. Bitcoinmarkets.com, check it out. Also up front here, I am live streaming on Rumble, YouTube, and Twitter today. So if you guys are watching on Twitter, jump over to Rumble or YouTube. It is BTC Market Update on YouTube, and it's Bitcoin and Markets on Rumble. It's different because I lost my YouTube channel because I mentioned the wrong election, and so I got my account canceled. But anyways, I am live streaming all over those places, including on Telegram, my community at t.me/Bitcoin and Markets. All right. Jumping into Bitcoin Fundamentals Report number 286. Always start off with a meme, but today I just did an image. I was going to do a meme of the halving, but I just went ahead and threw my thumbnail on there. Okay, this is new today. I'm going to have to work on this. It's a quick navigation to the other parts of the page, but my HTML must be rusty, and it didn't get aligned properly. But yeah, these are all the different sections that we talk about here on the show. You have headlines coming up first, then macro headlines, price analysis for Bitcoin, mining, and layer 2 or inscriptions. It's been pretty much inscriptions for the last few months. Okay, snapshot of Bitcoin. Having excitement that is over. I did live stream. If you guys are new watching on Twitter, we did a live reaction to the halving. I mean, I missed it by one block, but we did a live reaction to the halving, and then I ended up putting that up on YouTube and Rumble as well, so you can see that. We go through all sorts of different economic arguments around the halving. We go through inflation versus deflation, gold, inflation rate, etc., etc. Whether the halving is priced in or not, all those type of arguments. You can check that out on the last video. All right, media sentiment is neutral out there. Even with the halving, I haven't, still nothing super positive and nothing super negative. So that's good. Network traffic is calming down. We'll take a look at the mempool down below and the fees and all of that. Mining industry is stable even after the halving. There was a lot of FUD around Bitcoin miners. There's going to be a culling in the Bitcoin miners, and half of them were going to disappear. Of course, that was never going to be the case. We've talked about that many times here on the show. But the mining industry right now is stable or growing. I mean, most of the large public miners, at least, have planned expansions. For example, Riot, they just finished like the first phase of their new facility in Texas. And by the time that comes up, they're going to more than double their hash rate. So that's planned by the end of the year. We'll see if they can get that up and going by that time. But yeah, the mining industry is stable or expanding. Days until halving, we have reset our countdown here. 1,433 days until the next halving. I'll probably take that off for about 3 years and then put it back on when we're about a year out. Okay, price section. So weekly price, we did increase $2,400 since the last issue last Monday, and that's during this period of heightened uncertainty around the halving. So I think this is a pretty good performance. 3%, almost 4% increase in price over the last week, and that includes all that uncertainty time. Market cap 1.3 trillion. Satoshis per US dollar 1501, and 1 finny, my preferred denomination of Bitcoin. That's 1/10,000th of a Bitcoin, or 10,000 sats, and that was at $6.66 at the time of writing. Mining sector, previous difficulty adjustment was plus almost 4%. The next estimated adjustment is in 2 days, and it will be roughly 0.5% increase. Mempool at the time of writing was 263 megabytes. Like I said, we will take a look down below at all the mempool stuff. Fees for the next block, $13 at the time of writing, and this is wrong. It's not 1,144. I think it was 144 sats per virtual byte. That's a typo. Sorry about that. Low priority fee is, you could save yourself $2 if you don't care if it gets in the next block. Lightning Network, this was a big one, guys. Plus almost 2% on the Bitcoin capacity. I've been tracking this publicly here on the show and on the report for about a year. and we're just used to declines in these numbers. This is the biggest single, well, I think there was another single weekly big jump in the capacity about maybe 3 months ago. But other than that, almost every single week is down. So this is a big jump. They added 80 BTC to the capacity. Channels also went up about 0.5% to 52,448. Okay, in case you missed it, here is some of my content for the last week and more. Let's get into the headlines. So remember, I do headlines for Bitcoin and macro from my perspective. So I'm a Bitcoiner coming from the gold bug world many years ago in a past life. Have a background in economics, and so that's where I'm coming to Bitcoin from. And so I look at Bitcoin headlines and macro headlines, and I try to marry those two worlds together. All right. So happy halving. The fourth Bitcoin halving occurred at 8:09 p.m. Eastern on April 19th. I think I started streaming like 8:10, or 1 minute late. But that was also just past midnight UTC for 4:20. So that was, we got our 4:20 halving. Congrats if this is your first halving. Green in the community here. Let's see if he's in here today. He was on the last one. He said this was his first halving. Yep, there he is. And so congrats to you guys that made your first halving. Congrats that you have found this content. This content that's not selling you these NFTs and selling you these altcoins. And when is altcoin season? Oh, now is altcoin season, guys. We need to go in, dump your Bitcoin, and buy Solana 2.0. No, we don't do that here. Congrats for finding this content and for hodling and for stacking sats. And the sky is the limit for us. Okay. Live stream was immediately after. You can catch the replay there. Not many big takeaways, actually. I mean, it was kind of this is how halvings always turn out. There's this big buildup, and then like nothing happens. Well, sometimes there's a little bit of sell the news, but this time there wasn't much of anything to speak of afterwards. The big thing that, well, hold on. We were prepared for that, though, because we expected consolidation into the halving for 6 weeks. And some people said it was going to be sell the news. We did not. Some mainstream media commentators said miners would be crushed, but we debunked that. Perhaps the largest surprise, though, were fees. And we go over that below. The transition to 3.125 BTC per block was smoothed by the astronomical fees from Runes. More on that below as well. Okay. All in all, it was a very successful halving, something that will cause more people to ask questions and understand how Bitcoin works. So it's not just the halving. It's not just the physical reduction in flow, which is extremely important. But it's not just that. It's the confidence that builds. Imagine you are an investor and you personally have, I don't know, $20 million, and you're looking at putting $100,000 into Bitcoin or something like this. You're going to get more confidence the more Bitcoin grows. It's the Lindy effect, right? The longer something is alive and ticking, the longer it's probably going to be around and live and ticking. So this gives you big confidence. Now, if you're a money manager and you see this type of thing, you get more confidence. You're going to tell your investors, or at least advise them maybe, that they should take a look at Bitcoin. So it's not just the reduction in the flow. It is also an increase in demand. And we talked about this on Friday's live stream with about Nick Carter. And he was saying, oh, it's priced in. Let me just make sure I'm not muted on Telegram. I always get a sinking feeling. It's not just the deflation in the supply. It is also the demand side of the function. And so the halving increases demand. All right. That's that. What about the Hong Kong spot Bitcoin ETFs? With all this stuff about the halving, we might have kind of forgotten about that. But we are still waiting on the eventual launch date for the Hong Kong ETFs. I have not seen that come across my feed at all, but they have been approved. So we're just kind of waiting. Unlike the ones in the US where they approved and launched, I don't know, when was it? 2 days later, but was it 48 hours later, something like that? But they have reported their latest fee structure, or the idea about what the fee structure will be. This is from Wu Blockchain, and they're looking at some they were looking at different things, not exact releases of information, but through public filings and through kind of what people are telling their shareholders and all that stuff. So this is what we have. Fees for in-kind creation and redemption are going to be 0.5 to 1%. So that is interesting. If, the ETFs in the US have cash creations. So you have to come to the ETF if you want to, the authorized participants and stuff, they have to buy the Bitcoin with cash. And then when they redeem the shares, they have to sell the Bitcoins for dollars. Where an in-kind creation, and let's say you wanted to redeem the shares, you wouldn't have to sell the Bitcoin. You could just redeem the Bitcoin. But this way, in the US, it's cash creation, so you have to go back to dollars. The Hong Kong ETFs will be in-kind creation as well as cash creation. So they have two different fee structures here. Looks like the cash will be smaller than the in-kind, and they're going to tax these incoming Bitcoin transactions and outgoing Bitcoin transactions, I guess, at 0.5% to 1%. So that's an interesting thing. I'll have to chew on that for a little while. Secondary market trading fees, which doesn't every platform have different fees? It's interesting that they would say this is going to be the secondary market trading fees in total, but it's 0.25% if you order by telephone and 0.15% if you do it online. So those are some of the fees. They did not have a management fee that I saw, so that is still to come. But that's the latest update we have on the Hong Kong spot Bitcoin ETFs. They're coming sooner or later. Next headline is Grayscale. Grayscale's planned mini Bitcoin ETF will have a 0.15% fee, the lowest among spot Bitcoin ETFs. So Grayscale said it will contribute 10% of Grayscale's Bitcoin Trust, GBTC, assets to the Bitcoin Mini Trust. Grayscale, which currently offers the highest cost spot Bitcoin ETF, revealed that a planned spin-off version of the fund will have a 0.15% fee, which will be the lowest of them all. The existing Grayscale GBTC has a 1.5% fee. Okay, blah, blah, blah. Grayscale's Bitcoin Mini Trust was conceived to offer GBTC investors a lower fee option that's more competitively in line with other Bitcoin ETFs approved back in January. Well, why didn't they just make GBTC's fee lower? I think they want to wind down GBTC. There's no other reason. Why would they put a 1.5% fee? Why wouldn't they just put GBTC's fee at 0.15%? Because they want to wind it down. There's baggage. There's baggage to GBTC, and they want to wind it down. Currently, Franklin Templeton's Bitcoin ETF is 0.19%, the lowest cost spot Bitcoin ETF. And there's still some that have a waiver period. I think, didn't Van Eck say they were going to waive fees for the first year? Something like that. The Grayscale spinoff is also considered a non-taxable event for GBTC's existing shareholders. So this is big. They can instead of outflows that we've seen from the ETF flows, they will just be transferred over to the new fund, and it's not a taxable event. That's very interesting. So these investors will not be expected to pay capital gains tax to automatically transfer into the new fund. So that is GBTC stuff. Let me check out where we are over here. If there's any comments, questions, concerns. Dex Invictus finally got a notification. I'm good that you got the notification. I haven't seen you in the last couple, so it's probably why. Friday, I just live streamed on Telegram, and then I reposted it on YouTube and Rumble. But let's see. We got 124 people watching on all platforms put together, so welcome, guys. Like, comment, subscribe. This is the Bitcoin Weekly Fundamentals Report. Put it out now for over 5 years. You can see we are on number 286. Never sold a scam. Never bid off on all these leverage schemes and lending out your Bitcoin and all of that. Never promoted any of that stuff. Been around for a long time, since before well, during the block size debate is when I started podcasting. But yeah, like, comment, subscribe, check out the community. Go to bitcoinmarkets.com and subscribe to the free level. If you want to support the show, you can do that as well there. Okay, where were we? Down on macro. John Delaney, what's up, man? Okay. The big news last week, was the Iran-Israel thing, and that I never bid off on that. I wrote about that on last week's report. You guys can go check that out. Pretty much it was a nothing burger from the get-go, and we knew that because of the oil price. We didn't have to wait with bated breath about what's going on. The oil price told us the whole time that this was not that big of a deal. But anyway, that's kind of trickled over into this week. But the big thing that I'm watching right now are these currencies. So there is a looming dollar crisis that is forming right now. It's not quite to the stage of a wrecking ball, but it soon will be. If you look at these three major currencies, the Chinese yuan, the Japanese yen, and the euro, they're all diving against Bitcoin. Now, these aren't all to scale. The Japanese yen is doing the worst, but this is not good. This is definitely setting up for a dollar crisis. So a currency-led crisis could be starting now. As economic activity in a country drops, the domestic demand for their currency also drops. So a lot of people think that's just money printing, and that doesn't help. But these moves right here are not necessarily due to money printing. These are due to a lack of economic activity and a lack of demand for that currency. So if I am in an economy and my economy is in recession and shrinking 5%, my demand for that money is going to be lower. And so demand goes down, but supply stays constant, or maybe even goes up if there's some stimulus packages, right? And then you'll just get a depreciation in your currency. They also have fixed costs, and those are typically denominated in US dollars because of globalization and the global reserve currency. These Forex moves indicate that the economies of these countries are in sharp decline relative to the US. If you go back 2 or 3 years and check out FedWatch, that was a podcast I did with CK on Bitcoin Magazine. And we talked about this, that the US was going to lead this coming era because of XYZ, lots of different reasons. But one of them was this dollar. The dollar is not like everybody back then, like think about post-COVID, we had all this stimulus and everyone's yelling, oh, it's the end of the dollar. They're going to print it into oblivion. Money printer go burr, all this stuff. And then what happens? Like, yeah, we get some high inflation, but I would just say it's high. And that was CPI. That's not necessarily inflation. It was just high increases in prices for a brief period, and it was transitory, and it came back down. I called that, and I said the U.S. was also going to outperform all of these other currency or all these other economies for XYZ reasons. And that's exactly what has played out here. The U.S. has so many different advantages over all these other economies, especially in a deglobalization period. China, it's dependent on international trade, almost fully dependent. Like I saw a tweet this week about some officials in China. They were going door to door and checking expiration dates of appliances. I didn't know appliances had expiration dates. Maybe it's the warranty runs out or something. But if you had an expired appliance, they were forcing you to buy a new appliance so that they could increase domestic consumer demand, because there is none or very little. So China depends on external demand. And what happens? That's just another way of saying globalization, right? So they depend on external customers. And we're going into a period of deglobalization. That economic model is not going to stand up. And on top of that, you have to add the demographics question. They're aging. They're already a year or two older on average than Americans. There is no low labor cost over there in China. That's all gone. The one value that they have now is just being able to produce in quantity, but there's nobody to export to right now. So they're kind of screwed. All these numbers about China being at 5% growth, that's fake. They're in recession big time. You can see it in their currency right now. Okay, so all these economies are in real big trouble relative to the U.S. I don't think the U.S. will escape it. They will also slide into recession, but man, it sure does seem like they can put it off right now for a while. Dollar debts are becoming harder to service in these foreign countries as they struggle to access the dollars needed. So that just puts more wrenches onto their economy and tightens down more and more. And it's a loop. If they want to, the governments could print money, but then that just hurts their currency even more. The federal government could, or their national government could give them dollars to pay this stuff, but that would just, again, hurt their currency even more. So that's when the Fed would come in with these swap lines, and they would give very short-term liquidity in dollars to major banks that would then trickle it down to other players in the Japanese economy, in the European economy, probably not in the Chinese economy. They're screwed. So these are big moves happening, and I can see with these type of numbers right here and these charts, I can see a dollar crisis happening this year. All right, let's move on to the next story. Ukraine gets their billions despite CIA director reportedly warning to stop stealing money. All right, well, I didn't think this was going to happen. I thought the House would be able to not allow this through. But the Republican majority has been slowly being whittled away, and I think it's sitting at 1 right now. So they only have a 1 vote majority, and they got this passed. Or the Dems side, the globalist side, got this passed. So they are going to give them $61 billion of aid, and without that, the Ukraine conflict will continue into the next year. At the current time, Russia is making consistent gains. Without the money, it would likely have led to a major Russian breakthrough in the coming months, right before the U.S. election. So this was do or die for this Ukraine funding. This is from the Military Summary channel. I just wanted to throw in an image. You guys can go check out his stuff recently. The spending bill also includes money for Israel and Taiwan, seemingly created on purpose to maintain the highest possible geopolitical threat possible without actually solving or trying to win any of them. Relating this back to Bitcoin, this means geopolitical tensions will remain elevated, adding incentive for safe havens. So a lot of people think that as geopolitical tensions increase, let me make that bigger, and then, sorry guys, I'll go full screen for Telegram. So most people think that as geopolitical tensions increase, that is bad for risk assets, and they put Bitcoin in there as a risk asset. But Bitcoin is not a risk asset. It's a safe haven. And stocks, really, at least the blue chip, the top stocks, the Magnificent Seven or the FANGs or whoever we're talking about, they are also relatively seen as safe havens. So that is why I said going into this year, Bitcoin would do well, stocks would do well, and bonds would do well. Bonds have been not doing so well, but it's still a similar atmosphere that we're in right now, and bonds are off their lows. So that is something. But this main event looks like, or this bill looks like they are trying to do everything possible to maintain a high level of geopolitical threat. It also destabilizes globalization and global credit markets. So, one of the things that they talk about with Ukraine is wanting to maintain the rules-based order, quote unquote, rules-based order, by breaking all the rules, by having perpetual war, by doing escalation after escalation, by keeping everybody in a constant state, a constant threat. And that's what this thing is designed to do. That's what I'm saying. So they are trying to maintain the rules-based order by destabilizing globalization. It's not going to work. It's just going to re-emphasize what's already happening, and that is deglobalization, depopulation, etc. All right. So that's my macro news. Oh, and how do I tie that into Bitcoin? Bitcoin thrives in a situation of low trust. So, when you have credit-based money and you have international banks doing business with each other, doing repo loans, all sorts of financial engineering, that is an environment that can only happen in a very high trust environment. When deglobalization starts happening and there's bombs flying, are banks going to trust each other? Are businesses cross-border going to trust each other? I mean, some alliances will become stronger and some will become much weaker. But that is not a fertile ground for a credit-based system. And so the credit-based system will start kind of dissolving. It'll just start disappearing. And that's going to be a deflationary force. What does that mean for Bitcoin? Well, what do we go to other than that type of money, credit-based money, is commodity money. We go back to commodity money, and Bitcoin is the new standard. It is gold 2.0 for the digital era. So that's why it's good for Bitcoin. All right, let's keep going. Price analysis, next section. I'll get a Proton out this week, probably tomorrow. That is my premier newsletter. I talk all about my forecasting, near-term, medium-term, long-term forecasting for Bitcoin price, and also some macro stuff. All right, Bitcoin charts. The halving has come and gone. The uncertainty has waned. However, the spamming from Inscriptions has kept a certain level of uncertainty in the market, more than I had anticipated. We have moved up slightly since the halving, but I did expect the halving to occur between 65 and 70. We almost got there. We were at 63,700 at the time of halving, and you can see this hourly chart. Time of halving right here, 63.70. So if it would have been here, I would have been, just a few hours earlier, I would have been smack dab in my range of 65 to 70. But anyway, since then we have been going up. There's absolutely no hint of being a sell the news event at all. I included this chart below here on Thursday's BM Pro post. Check out bmpro.substack.com. And this is a Wyckoff reaccumulation. And it just fit this pattern perfectly with a fake out down below here and then taking off. So I think this is going to work out, actually, to be honest with you. But let's keep going. Weekly RSI has recovered nicely. It is okay that it did not get fully into normal territory yet. So let's look at this. If you look at the RSI, it got to 70.78, I believe, yesterday. Did not quite get all the way into normal territory, but that's okay. It got cooled off quite a bit. MACD here, we're pinching down, but we could reaccelerate just like we did back here. We have plenty of room to do that if we go up this week. Overall, the price is still relatively weak, however, okay? We haven't seen a huge relief rally post Bitcoin, but it is, or post halving, but it is only Monday. 70,000 looks like a level to watch. Dog, be quiet. She thinks I'm some stranger or something. If we can break above 70,000 by the end of the week, I think we could be off to the races. But if we don't, we'll likely have another couple weeks of consolidation ahead of us. And so here is the daily chart. And I'm just pointing out here, back in late January, we dipped down below the 50 EMA, kind of very similar pattern with a fake out down below this. You can see the red horizontal. This is a red horizontal as well. I kind of cut it off though. But we dipped down below, and then we rallied to the 50 EMA, supported above it, and then went off to the races. And so what have we seen here? Down, fake out down, back above the 50 EMA. We'll see if we hold it for a little while and then be off to the races. Let's take a look at the live chart real quick. Share this tab. So The same picture. It's looking real good. 66,483 right now. So we'll see if we can continue going in this repeat pattern. All right. Let me take a look at the chat here. John Delaney says half the Republicans voted for it. Yeah, I mean, yeah, the half that is the globalist side or the uniparty side, as you say. That's true. Okay, so 177 people watching, guys. What's up? Check out bitcoinmarkets.com. I'm going out on YouTube, Rumble, and Telegram, as well as Twitter. So thanks for joining. Consider subscribing. Consider subscribing at bitcoinmarkets.com. All right, back into it. So the fundamentals report has different sections. That was the price section. We did the headlines. Now we're going to go into Bitcoin mining. Bitcoin mining headlines. Bitcoin miners yesterday tripled the previous all-time high in revenue, coming in at over 78 million. So this is from Jameson Lopp. The halving transition for Bitcoin miners from 6.25 to 3.125 was eased by the massive onslaught of runes traffic. Jameson Lopp reported on Twitter that not only did miners triple their all-time high revenue record after the halving, but we also had a new record streak of 104 blocks in which fees exceeded newly created BTC. This is important if you think long-term about Bitcoin's viability, with block reward getting cut in half every 210,000 blocks. Eventually, the block subsidy itself won't be enough to incentivize miners to mine. At that point, transaction fees have to be high enough to do it all by themselves. So here is this. Have to zoom out actually for this chart, but this green line right here, boom, boom. Pretty amazing. I mean, I'm not worried about this. I didn't have any urgent transactions to send. I wasn't getting in on this runes traffic or this NFT traffic. I didn't care. I could care less about that, really. And so this is good. This is good for the miners. It makes the miners a little extra money. It makes the degens a little poorer. And I hate to say that. I hate to say the degens get a little poorer, but you know, they've been warned not to get involved with this stuff. Okay, so this dynamic that I talked about up here, that there won't be enough subsidy to have miners mine. That's the dynamic. This dynamic causes a lot of confusion in Bitcoin, but it is one I'm convinced will easily work itself out over the next 10 to 20 years. I don't think we have to wait till, another 40 years or anything like that, 60 years for the fees to outweigh the subsidy. I think that'll happen in the next 10 to 20 years. And this 104 blocks in a row is kind of a taste of that, long before the subsidy gets to critically low levels. For example, the base layer will be more used for very large transactions and settlement between large players. Banks. If the Bitcoin network's base layer can transact 1 trillion per day in value, 1%, a 1% fee would be 10 billion, and that's plenty sustaining for Bitcoin. As comparison, I tried to look for some Swift numbers, but they do have the number of messages, but they don't have an estimated volume, right? But anyway, in 2004, though, Swift, they said they had 50 million messages per day at an average size of 500,000. And that comes out to $2.5 trillion a day back in 2004. So pre-Great Financial Crisis, 20 years ago. Last year, Swift handled 48 million messages per day, but we don't know the average size. Probably are smaller than 500,000, I would assume. But even then, it's probably over 5 trillion a day that Swift handles. So that's kind of like the level that we need to talk about with Bitcoin. We don't need to compare Bitcoin to PayPal. All right. At least let me take that back. We don't need to compare Bitcoin transactions, on-chain transactions, to PayPal or to, Visa or anything like that. We need to compare them to Swift or the FedNow, maybe even ACH wires, something like that. That's what we need to compare these to, on-chain Bitcoin transactions. Now, Of course, there's all sorts of different Bitcoin transactions that you can have. Layer 2s, then you compare layer 2s to Visa or something like that. So all of these things have the comparisons, and these comparisons need to get worked out. But the discussion right here is about fees. So fees, if we have 5 trillion a day in Bitcoin traffic, the miners will be just fine on transaction fees. We don't have to worry about that. Bitcoin currently handles approximately 640,000 transactions. I think I looked up the numbers yesterday, was 641,000 transactions per day. For it to have 1 trillion per day in volume, transactions would need to average over 1.6 million, but that is just for the base layer. Bitcoin's layer 2s will be used by the common man, while the base layer will be bank-to-bank transactions. All right. Now let's move on to hash rate difficulty. Hash rate continues near all-time highs, with difficulty set to adjust up by less than 1% this year. Last week I said it will be interesting to watch the hash rate after Friday's halving, but I expect less fireworks than seems to be the consensus out there. So far, there has been very little minor drama after the halving. It has all been around the transaction fees. If you look at the right side of the chart below, you can see a little hash rate drop off since the last halving, or since the halving, but still within normal ranges. I'm talking about this one over here. We've seen a bit of this is a kind of an estimated current hash rate, I'm guessing. The orange line is, or smooth orange line is a moving average, and I'm guessing it's a 7-day moving average. And then the pink line is difficulty. But the hash rate has come down. Even the 7-day moving average has started coming down, but not significantly. You can tell there's nothing like jumps out at you like, whoa, the halving caused something dramatic. Okay. In the mempool, now this is interesting, guys. So we've talked about all these, how volatility tends to happen around high fees and all that, but there wasn't much volatility at all. We looked at the chart, and there was not very much volatility at all during this huge spike in fees. Maybe it was so high that people couldn't move their coins. Because there is fee insensitive transactions. That's what I've been calling them. Fee insensitive transactions. That means they're large transactions, they're relatively large in size, and you want to get them to an exchange or somewhere immediately. So you're willing to pay a $10 or $20 fee. It's not that big of a deal. Say if you're sending a couple $1,000s here or there, right? But maybe the fees were so high that it made people not do that. And then that kind of tamped down the volatility. So the high fees actually stopped some of the volatility that we might have seen in the price around halving. That's an interesting concept. So also, high fees make certain amount of supply unspendable. So if you have an address with $100 and the fee goes up, $100 worth of Bitcoin, and the fee goes up to $200 to send that Bitcoin, you can't spend that UTXO, or you shouldn't spend it. So a lot of the balance on the Bitcoin network becomes unspendable. That reduces the supply as well. I mean, the effective circulating supply of Bitcoin, which should decrease the supply relative to demand and increase the price. So anyway, lots of different interesting dynamics. Maybe we'll have to talk about those on a different live stream. What else is interesting is most of the gains in the mempool size have come from the 8 to 12 sats per virtual byte. And that is this teal section here. Actually, 8 to 10 is this teal section, and then the 10 to 12 is this green section right above it. Look, you can see just in the last 12 hours or so, this has gone up, this section. But that's where most of the gains are coming from. But that's because they were getting approved back here. They're getting eaten through. But here they weren't. They were, all of these more expensive transactions were taking up the block space. So that's why this area had the most growth. And that's all I said about that. Okay, let's move on to inscriptions. So if you are anything like me, you don't follow much of the inscription debate. It is not central to Bitcoin success. I view it as an unexplored niche or niche. Who one of my listeners hates it when I say niche. Niche that some people are trying to exploit. The altcoin niche, not Bitcoin, but the same, has been tried and failed. So these runes and these NFTs and all this, they've been tried and have failed. They've been debunked as just silly tokens, really. And so this doesn't concern me. It has nothing to do with Bitcoin's success. So I say, what are runes? And I link to a CoinGecko article that I would, I haven't done any research on this at all. To be honest with you, I'm just kind of reporting this to you guys. So maybe if you have more for me, tell me in the comments down below. Join the community over on Telegram and tell me all you know about runes. But anyway, this is from Casey Rodimer. Runes were built for degens and meme coins. Oh, man. It's no wonder they're losing all their money. But the protocol is simple, efficient, and secure. It is a legitimate competitor to Taproot Assets and RGB. The protocol is self-contained and has no dependencies on ordinals or inscriptions, making it extremely simple. Okay, there you go. So it's not an inscription. Balances are stored in UTXOs, which can be locked with the time lock codes. So runes can be lifted on the Lightning Network. Rune names are optional, and if an etching does not specify a name, a reserved name is allocated. Etchings of reserved names are unconditionally valid, and if they don't have a supply capped mint, oh man, this sounds just like totally exactly what he says here. Degens and meme coins. It's worse than I thought. The Ordinals library provides everything needed to encode and decode rune stones, so integrations should be straightforward. I am highly skeptical of serious tokens, but runes is without a doubt a serious token protocol. Just the insanity. So I guess people lost a bunch of money, and I went through here. There's a good thread. Let's just open this up and go through this thread from Francis Pouliot. He's just going through all of these people that lost money. So somebody just nuked 5,000. 25,000 doing this. Lost close to 2,000 same way, but managed to snipe some blah, blah, blah tokens. Burnt 5,000 as well. I mean, these people are just crazy. Let's keep going here. What do we got here? Lost 300. Lost 2,500. All the pre-runes have lost their 9-figure market caps. Of course they did. Agree, I was so foolish for buying apes for 2 to 3K. Lost it all. I mean, this is not unusual. This is what we're going to see over and over and over again. And so let me go back to the report. This guy had a good summary. He said, if I put the money in the hole, I get a prize? Maybe. Okay, 500 in the hole. I get a prize now? No, someone else put 1,000 in the hole. Oh, okay. I put 1,500 in the hole. I get prize now? Nope. Someone else put 5,000 in the hole. Okay, I put 10,000 in the hole. I put a total of 12,000 in the hole. I get prize now? Nope. Someone else put in 12,100 or $12,001 in the hole. They get the prize. Do I get my money back? Nope. What goes in the hole stays in the hole. It's just, that's the type of degeneracy we're talking about here. All right. So I think that will play itself out. And if you look at what it's doing to inscriptions, it's kind of interesting that there's a battle going on between runes and inscriptions. Both are kind of bad for fees, or people don't really like them. They're not very popular with the hardcore Bitcoin maximalists and Bitcoin OGs. But it's interesting that they're dueling. Now we have dueling things going on right out there in public. So the number of inscriptions has plummeted to 5,000 or less over the last 2 days. And so you can see way down here, because these are fee sensitive transactions, not fee insensitive. So they have been priced out almost instantly by all the runes. Okay, this is the last thing. Just a note for beginners. I realize we have over 200 people watching, probably a lot on Twitter. So thanks for guys for joining. Check out bitcoinmarkets.com. Find me on YouTube, Rumble, and Telegram. Link should be down below if you're on any of those platforms to the Telegram. What else? Yeah, this is the fundamentals report. I go through the main target audience is people that are more familiar with Bitcoin, but I know every once in a while some beginners stumble across this. So I tend to put a few things in there each issue for beginners. But here, this is for beginners about these tokens. So these types of tokens have existed on Bitcoin for a very long time. Little do people know that NFTs started on Bitcoin with the counterparty protocol back in 2015 and 16. And I remember this. I think I might have even bought it in 2014. So I might go back that far, but that's the only shitcoin I ever bought was XCP, not XRP, but XCP. That was the counterparty token where you burn Bitcoin to get the token. And so, yeah, they did a NFT protocol just like that's going on right now. And it was only after that did they move to altcoins because of cheap trading. And DeFi took off, NFTs took off around 2020 or so. I don't know the exact dates. This was because these centralized altcoins allowed for near costless trading and creation. I should have said creation. So you could create a million of these scam tokens or NFTs, mint a million of these things for fairly cheap on these altcoins. I know Ethereum started getting more expensive, but it was cheap in the beginning, and it was cheap on all these alternative networks. So that's why they were over there on the altcoins anyway, because Bitcoin's fees were too expensive and it wasn't economically viable. And now they're just trying to do it again. So hold on a second. My boy is being loud. All right. Okay, so the scams and Ponzi-like greater fool dynamics did not have an upfront cost. So when they were doing it on the altcoins, and they still are, but it's not taking off nearly as much as it is being on Bitcoin, because there's an affinity type scam going on. When you're on Bitcoin, you can say you're on Bitcoin. In the past, you could say you were a blockchain. Look, I use a blockchain like Bitcoin, so I'm like Bitcoin. I'm just as valuable as Bitcoin. When, of course, that's all lies and that's all garbage. Now that affinity scam isn't working so much. So now they're doing it saying they're literally on Bitcoin. And they're trying to use that as a selling point for these different NFTs, which people will soon find out it's not. They're going to lose 5,000 here. They're going to lose 2,000 there. They're going to lose, their entire life savings on the next one. And eventually the greater fool runs out of money. Okay. So these things could work longer on these altcoins because they didn't have an upfront cost. However, Bitcoin's fees are like a Ponzi token shield that requires any of the schemes to actually produce significant economic value to support the higher fees. So you can't have wash trading and stuff. You can't have people buying them from themselves and trading them over the network. Because let's say I want to fake volume for a certain group of NFTs, Bored Apes or there's some other ones there. I should know the names too, but I don't. But let's say you want to fake volume for that and wash trade. So I buy them for myself for $10,000. And then someone sees, oh yeah, look, someone bought these for $10,000. And then I do that a few more times because I'm just selling them back and forth to myself. And then I dump on somebody, right? But you can't really do that with Bitcoin because Bitcoin's fees are so high. Just look, they got to, I don't know, $200 per transaction. And so you have to actually pay those fees. You actually have to have some economic value, there has to be actual demand, and not just wash trading demand and money laundering demand and stuff like that. There has to be real actual demand to support these things. So anyway, I just give a little quick example, but that's it, guys. So check out bitcoinmarkets.com. I'm going to check out the comments here real quick, see if there's anybody on the chat. Oh, I'm in the wrong screen. There we go. All right, I'm going to check out Telegram chat. All right, and then finally, I'm going to go to Twitter and see if I can find that. I'm a Twitter streaming noob, but should be able to find this. All right. All right, well, that's going to do it for me today, guys. Thank you for joining me. Check out all the stuff down in the comments or in the links below. Like, comment, subscribe. See you on the next one. Bye.